the implications of Elon Musk's mental state on the future of cryptocurrency prices. Elon Musk has always been a fascinating figure, part inventor, part entrepreneur, and part cultural icon. His influence spans industries as diverse as electric vehicles, space exploration, and social media. But more recently, questions have arisen about the toll his many responsibilities are taking on his mental health. Seth Abramson, one of Musk's biographers, has voiced concerns that Musk may be going mad while juggling the demands of running Tesla, SpaceX, and X, formerly Twitter, along with his role on Donald Trump's transition team. Abramson even warned that Musk's mental state could endanger us all, a stark statement that feels especially relevant when considering Musk's outsized impact on global markets, cryptocurrencies in particular. Musk's relationship with cryptocurrency has always been a strange yet powerful one. He's not just another billionaire with investments in Bitcoin or Dogecoin. His public comments have sent shockwaves through the markets time and time again. A single tweet from Musk can launch a cryptocurrency into the stratosphere or send it spiraling downward. For many, this level of influence is both exhilarating and unsettling. Now, with questions being raised about his mental health, it's worth reflecting on what this means for the future of crypto and the people who have tied their financial futures to its volatile fortunes. Musk's ability to sway cryptocurrency markets isn't just about his wealth or business acumen, it's about his persona. He's seen as a kind of modern day Tony Stark, a visionary who's pushing the boundaries of what technology and humanity can achieve. This larger than life image gives his words an almost mythical quality, and investors often respond to his tweets and statements with fervor. When Musk tweets about Bitcoin, Ethereum, or Dogecoin, prices can skyrocket or crash within hours. One example is Dogecoin, a cryptocurrency that started as a joke. Musk's frequent tweets about Dogecoin turned it from an obscure meme coin into a legitimate player in the crypto market. At one point, Dogecoin's market cap soared to over $80 billion, thanks in large part to Musk's advocacy. Similarly, his endorsement of Bitcoin through Tesla's purchase of $1.5 billion worth of the cryptocurrency pushed its price to new heights. But Musk's decision to halt Bitcoin transactions at Tesla due to environmental concerns caused a steep drop in its value, demonstrating how quickly sentiment can shift when he changes his stance. This kind of influence is rare and frankly unnerving. Markets are supposed to respond to fundamentals, supply, demand, technological innovation, not the whims of a single person. Yet, with Musk at the helm of public discourse around cryptocurrencies, the line between serious investment and emotional speculation has blurred. His unpredictable nature has become a feature, not a bug, of the crypto market, and it's something that investors have had to accept as part of the game. But what happens when the unpredictability feels more like instability? Abramson's warning about Musk's mental health adds a new layer of uncertainty. If Musk's behavior becomes more erratic, as Abramson suggests, the consequences could ripple through financial markets. A poorly timed tweet or an impulsive decision could trigger massive sell-offs or speculative bubbles, creating chaos for investors and potentially undermining confidence in the cryptocurrency market as a whole. One concern is that this kind of volatility could scare off institutional investors. Over the past few years, institutions have slowly started dipping their toes into the crypto world, bringing legitimacy and stability to what has often felt like the Wild West of finance. But institutions are risk-averse by nature. If Musk's influence starts to feel like a liability, if his erratic behavior creates unpredictable swings, these players might decide that crypto is simply too risky to be part of their portfolios. Without institutional support, the market could stagnate, or worse, collapse under its own weight. There's also the question of whether Musk's influence will diminish over time. Right now, his words carry extraordinary weight, but public perception is a fragile thing. If concerns about his mental health become more widespread, people might start to take his pronouncements less seriously. Investors could begin to question whether his tweets are based on sound reasoning or impulsive whims. This erosion of credibility wouldn't just impact Musk. It could shift the entire dynamic of the cryptocurrency market, forcing it to mature and rely more on fundamentals than celebrity endorsements. Another possible outcome is increased regulatory scrutiny. Governments around the world are already wary of the cryptocurrency market's volatility and lack of oversight. If Musk's behavior leads to significant market disruptions, regulators might feel compelled to step in. They could introduce stricter rules about how cryptocurrencies are promoted or traded, particularly by influential figures like Musk. While regulation could bring stability in the long term, it might also stifle innovation and deter the very kind of risk taking that has made cryptocurrencies so revolutionary. Musk's mental health is, of course, a deeply personal issue. But because of the industries he leads and the influence he wields, it becomes a public concern as well. Running Tesla, SpaceX, and X simultaneously would be an overwhelming task for anyone, let alone someone who's also a father, a cultural icon, and a frequent subject of controversy. Musk himself has spoken openly about the pressures of his work and the toll it takes on him. If those pressures are intensifying, as Abramson suggests, it's not hard to imagine how they could affect his decision making. For those invested in cryptocurrency, the implications are both immediate and far reaching. In the short term, Musk's mental state could contribute to the kind of volatility that has always characterized the market. Prices could swing wildly based on his statements, creating opportunities for traders, but headaches for long-term investors. In the long term, however, the market might need to reckon with its reliance on figures like Musk. If cryptocurrency is to become a truly stable and mainstream asset class, it can't depend on the whims of any one person, no matter how influential they are. The crypto world has always been a mix of promise and peril, a place where fortunes can be made or lost in the blink of an eye. Musk embodies both sides of that equation. He's a visionary who has helped bring cryptocurrencies into the mainstream, but he's also a wild card whose actions can create chaos. As concerns about his mental health grow, the stakes feel higher than ever, not just for Musk, but for everyone who has placed their faith and their money in the volatile world of crypto. Ultimately, the future of cryptocurrency will depend on its ability to stand on its own, independent of Musk or any other singular figure. Investors, developers, and regulators will need to focus on building systems that are resilient, transparent, and less susceptible to the influence of any one individual. Only then can cryptocurrencies fulfill their promise of creating a more democratic and decentralized financial system. Until that happens, however, the market remains tethered to the unpredictable brilliance and potential instability of one of its most influential voices.